Good morning. Good morning. Excited for another day. Blessed to wake up this morning. Blessed to be able to get on these charts, share some insight, share some lessons that I've learned over the last week since I last seen you guys, last Wednesday. I'm going to do a fresh markup of my charts. I'll kind of explain why. We'll see what's happened with gold, which is why I think it's time for a fresh, clean markup of clean, fresh decision making levels. So you guys will be able to see me do that live. But before I do that, I have an announcement to make. What's the announcement? Drum roll, please. So I blew my funded account. Blew it. Both of them. Because remember, I had the express funded account and then I had the combine and there was copy trading on, right? And I blew both of them. If anybody remembers the 5 things that I mentioned that are required in order for us to be consistently profitable traders: discipline, consistency, patience, execution, and risk management. Okay. My risk management and my discipline were the 2 pieces that I lacked in the last trade. Literally the very last trade I took. It was that one trade that took me out, right? And so discipline in what area? Discipline in my execution, my approach, my professionalism. I think that's one thing that's not talked about enough. Maybe we don't talk about it enough, but the professionalism in trading that we must have in treating trading like a business and not just a side hustle or a hobby, right? Like when we treat it with professionalism, we're on the charts. We're in front of our computer, right? We're not trading on our phones. We're not trading while we're in bed, like things like that. We could get there, but if we ever are doing that, which I did, and when I think about an outcome, I just don't take the outcome in a vacuum. And what do I mean by that? There's always a contributing factor to the outcome, or there's always a determining factor to the outcome. The determining factors are what we can control. Our inputs, those are what we can control. So why am I sharing this with you guys? Because I think it's important to understand that's what's different about our community, right? We're not talking to you from the mountaintop. We're not speaking from a place of what we've already accomplished, right? And I think it's a lot more resonating because you're able to hear from us. You're able to see us grow together. We grow together. We bloom together, right? So I think that's what's unique about our community. But that's why I wanted to share that with you guys, because it's important to know that these things are going to happen. And it's how do we respond? How do we reflect? How do we approach it? How do we keep pushing forward? So if I didn't share this stuff with you guys, you just assume that it's you would just assume. You would just assume that I'm profitable, I'm a profitable trader, which I'm currently not. And that's totally okay. And if you don't want to watch our videos, if you don't want to absorb our insight and do your own due diligence, which I expect you to do your own due diligence no matter what, right? But if you don't trust us because we are not yet profitable traders, that's totally fine and I respect that. But for those of you that do trust us anyways and watch our videos and join our community in whatever fashion, you will be able to gain the type of insight approaches that you can only gain from seeing the process and really going through the process of the roller coaster ride of trading, right? From being profitable, passing challenges, to failing, to losing, to blowing accounts, to, you know what I'm saying? I want you guys to see that process because it's not easy. And so I had to start off the live today sharing that. But if you have seen any of the lives up until this point, you know there's not a single discouraged, defeated bone in my body. And I know I can say the same for you. No matter how many losses we take, discouragement, it will never exist because we understand the game, right? And so this is why I love the way we approach connecting with the community, the trading community. And it's why we're uniquely positioned, our trading community, because we don't want to put you in a box to only trade our strategy. If you already are a trader, if you're already trading, you don't have to join our community just to trade our strategy. We're not going to force anything down your neck, right? You don't have to trade our strategy. You don't have to mark up levels the way I do. But if you want to be a part of a community that wants to see you win, that wants to win together, then the Bloom community is the place to be. We'll talk about the macros. So if you don't focus on the macros, that's something you'll want to focus on just by hearing us talk about it, right? Because the fundamentals are the force behind the market, period. No questions asked. We that and that is something that you can just go to ChatGPT. Just ask ChatGPT, like, how important are the fundamentals when it comes to trading? How important are macroeconomics when it comes to trading? It's just not me saying it. Something that we've studied, right? So I wanted to preface this live by letting you know that I made a mistake. I'm a trader. I'm working on being consistently profitable and I still make mistakes, right? I still make mistakes. But then I wanted to add on to this conversation by saying the 5 factors that I mentioned are the most important in trading. And if you don't have all 5, then that one could result in what it resulted in for me, and that's blowing an account, right? But then now that we got that out of the way, I'm gonna go ahead and share my screen. We're going to perform a fresh markup on my chart. As you see, last night we got some downward movement from gold, and I'm gonna touch on that here soon. And just my personal opinion of what we're seeing right now. So gold fell about 200 points last night. Beautiful move when I'm looking at the VXT entries. when I'm looking at the VX tree and trees. Beautiful move. You'll see that I got the MACD back on my chart. I used the RSI for a couple weeks, and wasn't in love with it, right? Like whenever I would compare and contrast the MACD to the RSI, they did do very similar things. But the story that the MACD tells me versus what the RSI tells me, I like a little better. I can paint that picture better. So I'm back to the MACD, the original way that we approached our strategy anyways. But like I said a couple weeks ago, I was forward testing the RSI. I just wanted to see how I felt about it. What type of increase or decrease in my edge did it give me, right? Um, but you see, I got all these levels here, right? Imbalance got filled cleanly, beautifully. We'll delete that, but we're gonna do a fresh markup. We're gonna do a fresh markup real quick. And so we're gonna go on to my daily chart. Take a look at my daily chart. Look for some decision making levels. Decision making levels on my daily chart. We got one right there. Daily decision making level. Go to the 4 hour. Because now I want to get one above price. It's close. I'll mark that one. It is above current price. Current price is down here. 4 hour decision making level. Let's go down to the 1 hour. See if I can get one closer to below price. Oh, I like this area right here. I like this area right here. Right. 3 candle structure, 3 candle structure, 3 candle structure, 3 candle structure, just all in that same area. I like that area. We've seen the resistance of this area already. Really like that area. A 3 candle structure just validates that that's a strong area. And I do want this area down here as well. All right, so I like that. Now let me get something above price. Get something above price. 1 hour time frame. 1 hour decision making level. These are probably all time highs. Oh no, they're not. No, they're not all time highs. All right. And now if price breaks this 1 hour decision making level, I would like a decision making level above that, right? So ideally, it's over here at these all time highs, which 1 hour time frame, perfect. Perfectly have those decision making levels. We see we don't have any areas of imbalance. That area of imbalance just got filled recently. 4 hour. Yeah, we don't have any area of imbalance, which is not bad. Tells us a lot actually about current price. I think it's ready to make another strong move, either downwards or upwards. Even on this move down, like not many areas of imbalance created. As I'm just scanning my eyes through this year, not many areas of inefficient price action. Excuse me, areas of imbalance. I want to use the same verbiage every time. So, cool. So now I got my charts marked up. I got my force fields keeping price from going downwards, and I got my force field of keeping price from moving upwards. between this 4 hour and this 1 hour decision making level. Right. So now when I go down to these smaller time frames, this this is an area of no trading. This is a no trade zone, right? Because we're looking at, I mean, that is 60 pips of movement, or 60 points of movement, excuse me. That is most likely because we are kind of like we were on gold a couple weeks ago, where the volatility was just out of whack. We're back in that environment. Um, However, just because this level is a decent opportunity in terms of points, it's still higher risk, because if we just look at the way my confirmations are set up, like I would have to abort my entry rules in order to take a trade right here. So, and I don't want to do that. I don't want to do that. So that's an area of no trade for me. Um, but now let's kind of talk about the, I mean, we're looking at gold right now. We see the downward move from gold, but is that consistent? What is the, and I hope my screen's been showing the whole time, but just think about what we know about what's currently going on. I just want you to ask yourselves, what would, and this is for those of you who understand a little bit, just a little bit, about how gold moves, in terms of what moves it, why is it important, what do investors look at it for, what increases the value, right? I just want you to think about that. Then I want you to think about what's currently going on right now. And, I've said it the last handful of lives, gold is going to thrive in two different types of environment: policy driven environment, or fear driven environment. Those fear could apply to many things. It could be the fear of the lack of growth of the economy. It could be fear of war. It could be fear of fiscal instability. It could be like that fear could surface to multiple different sectors of the market, the economy. And then policy, that really only comes from one thing, like the Fed. I guess not one thing, because the Fed increasing interest rates, that could have to do with growth, right? There's some things that, but aside from that, those are going to be the two things that gold thrives in, right? And so let's look at one of those factors. One of those factors I said was policy. Right now, this is the CME Fed Watch tool projecting the the expected rate announcement for the March 18th Fed meeting. And it's a 97% chance that rates do not get cut, or they do not get increased. 97%. And remember, 4 times since 2007 has the Fed done something different than what the market expected. Okay. And so we can agree that if we believe that gold thrives in two different environments, that policy is not one of them right now, right? We could make the case that this downward move was because of policy, because the higher the rates, the more downward pressure that would put on gold. You could make that argument, right? And I wouldn't be opposed to agreeing, but I don't believe that's something that will stay a constant because of the other aspect of it, right? When we talk about the fear, the safe haven demand. And I'm going to share some insight on that, exactly what I mean by that. The exact things that be, you could do more than, um, you can go and do your due diligence on how these factors contribute to gold's price, right? But I'm going to share plenty of context for you to get off of this live stream and have a little bit more understanding than what you joined with, of that allows you to form your own fundamental bias. I'm always careful when I say biases, because having a bias, it does blind our vision. Even a fundamental bias, it's blinded my vision. It's one of the reasons that I blew my account, because I had a fundamental bias. That's why those five: risk management, consistency, execution, discipline, patience, are so important, because it will make sure that we still operate accordingly, not just out of our bias. The trade I took yesterday, entered a buy when my confirmations came in, and the market started to invalidate me. And I said, man, with this stuff going on with the US and Iran, like, there's just no way. Like, we have to find our way back upwards, right? And I had a fundamental bias, and that's literally how I blew my account. I abandoned my risk management rules. Once the market invalidated me and got to that threshold, I abandoned it. I turned hopeful because of my fundamental bias, right? So a fundamental bias and a technical bias, they are both unsafe. However, I lean my decision making more on the biases I have fundamentally, because they're rooted in fact, versus technical that are just rooted in formula, right? I rooted in fact versus formula from a technical sense. I still trust the technicals, but I trust the fundamentals more. But either way, our bias can't rule our decision making, because if we get even deeper into it, biases are emotional, right? Biases are emotional. Biases are what you feel should happen based on what you know, what you understand, right? And we want to stay far away from emotions making our decisions. And if I ever say the words you, please know that I'm talking to me as well. Like I said at the beginning of this, we're on the journey with you guys. Anybody watching this, whether you've been trading for 5 years or you just started, we're on the journey with you. So I'll make sure that I'm conscious of saying we, us, our, because I'm with you guys in this game right now, right? Like, look, this is the only account I have. I'm back to the trading combine, right? It's 'cause I blew my account, both of them, right? So I'm taking it. We get a chance to reset. We're not gonna quit ever, because we know it is completely up to us. It is completely up to us being the person doing the things to have the outcomes that we want to have. Period. Period. And so be careful with that when it comes to fundamental and technical biases. Be careful that they are not removing you from your process. Be careful that they're not making you impatient. Be careful they're not creating a lack of discipline in your decision making. Be careful that they're not avoiding your risk management rules. Be careful of that. So, downward move, we could say it's policy driven because I just showed you that policy is not in gold's favor. I'm going to delegate this move to manipulation. That's just my personal opinion. I'm going to delegate this move to manipulation. Now, this is a pretty strong move. Normally manipulation may look like a few large candles with a large wick at the end, but I feel like manipulation can come in all shapes and sizes. I don't think there's any one way we could say manipulation looks. However, let's talk about why that is the way I feel, right? So when we think about gold, remember, what did I say? I said gold thrives in two different environments. One is policy, two is fear. And right now, I'm sure we all are well aware of what's going on. You've seen something happening. And so and I have no problem as this because I want you guys to start using these tools. Last week, if you didn't see it, I walked you through exactly how I get my research. And I forgot to talk to Q about that. Um, but we're gonna get you guys the prompts. That's something that we'll give out to the community. You'll be able to access it in the community. We'll put a link in the description to be able to access it. But we're gonna get you guys the prompts to be able to do your own research on the fundamentals, right? You're not gonna have to do anything besides read and execute with the tools we give you. That's it, right? And so if you look, as of March 2nd, the markets are focused on a profound macro gravity shift where gold has fundamentally decoupled from traditional economic drivers. Now, these traditional economic drivers it's referring to are the rise in yields and the rise in the dollar. Usually, when the yields and the dollar rise, it puts downward pressure on gold. But because of the current environment, because of the fear aspect, safe haven demand is getting more attention, right? So when it's talking about the decoupled from traditional economic drivers, just think the dollar, the DXY index, and yields, short term, long term yields, real yields, which is inflation adjusted. Like think of that pool of the markets, right? And said, okay, 5,400 per ounce as investors re-rated it from a simple inflation hedge against the very architecture of the dollar denominated financial system. All right. Primary factors currently impacting gold prices are driven by an unprecedented convergence of kinetic military escalation. Remember, we talked about last week the kinetic action, which was it could be um, destruction, it could be psychological operations, it could be psychological warfare, it could be cyber warfare. Those are the types of things when we heard kinetic military attacks. It could be a variety of things. Global energy blockades, which is big, and severe U.S. fiscal fragility. And so the first thing was the Operation Epic Fury, which was the launch that the U.S. took on Israeli or on Iranian nuclear and missile infrastructure, right? And so when we talk about fear, fear of war is a big one. Fear of war is a big one. We're talking about the environments that gold thrives in: fear of war, geopolitical uncertainty, geopolitical tensions, right? Gold is going to thrive during those times. And that's the exact thing we're seeing right now. The exact thing we're seeing right now. All right. And so that's number one. Number two, so that's what this section is. is the attack that took place, what, yesterday? The day before? Um, I think it was yesterday. But then we have a hard closure of the Strait of Hormuz. We talked about this last week. Last week, it was only partially closed. And then we were trying to figure out, okay, if it contributes to 20% of global supply between oil and liquid natural gases, what does 20% closed look like? Like a partial, what does a partial close look like? Well, now we don't have to wonder what a partial close looks like because there is a hard closure, right? Halting 20 million barrels of oil per day. And this is of global supply. So I know the US just did a deal with Venezuela for their oil. I'm pretty sure they just sold that actually. Who did they just sell that oil to? They just sold. Anyways, I'm not gonna go down that rabbit hole. We just sold the oil we got from Venezuela to somebody else. I forget who it was, but even though it may not impact the US heavily as much as other countries, the impact on a global supply chain will increase fear. It does increase the geopolitical tensions, right? Because it's impacting global supply that has been initiated with US involvement. So I don't want us to think um, if something doesn't affect the US, then it's not going to affect gold prices because that's not true. Yes, gold is often priced in US dollars, but the market, it's it's one puzzle. There's not a US puzzle, a European puzzle, an Asian puzzle, a China puzzle. There's not anything like that. It's one The market is one puzzle. Now, I do agree that the US has bigger influence over how it impacts the rest of the market. Yes, I do believe that. And what we're seeing from this hard closure of the Strait of Hormuz was connected to something that happened with the US. Okay. And so, what I want you to pay attention to, though, is this line right here. I don't trade oil. I won't ever trade oil. I don't have a desire to trade oil. Um, but it's important for us to know the things that impact gold. And that's why many weeks back I told you guys I was only going to be trading gold going forward. Day trading, from the moment that I said that to 15 years down the line, I'm only ever going to day trade gold. If you see me in 10 years from now, which you will see me in 10 years from now, I don't know if I'll still be doing live streams. Maybe I will. But and I'm day trading something else besides gold. Screen record this video, send it. Send it to me. Put it on Instagram. Tag me in it. Call me a liar. All that. Confront me. Hold me accountable. Because I don't need to trade anything else besides gold. And the reason is because there are so many things from a fundamental aspect that we need to be proficient in to really understand any environment that we are in when it comes to an asset we're trading, right? I want to be proficient in understanding being able to identify the climate we're in and understand what to look for to validate price going higher or price potentially going lower. Like we just have to really wrap our minds around all the factors that contribute to an asset rising or falling in value. And for gold, oil is a contributing factor to gold's prices. And so right here, A massive spike in oil, with Brent crude jumping to an intraday of $82. For gold, this acts as a massive inflationary impulse. Historically, I love that. I love that. I love that word. I love that word. Historically, every $10 increase in oil drives US CPI higher. What is US CPI? Consumer Price Index. Every $10 increase in oil increases the cost of prices that that consumers pay, right? And that'll show up in the CPI number, fueling demand for gold as the ultimate store of value. Because now inflation is increasing, now our dollar becomes less valuable. And so gold gets the demand to store the value during this environment. So that's something important to stay keen to stay aware on top of, right? That's why I always like to start off these sessions going through this. We'll always have time to get on the charts, and I'm just about wrapping up, and then we'll get on the charts. I'll let you know what I'm looking at, and we'll see if we got opportunities. If not, we'll wait, right? But we got to lay the foundation before we can even start to put all these different candles in our face and all these different levels. We have to know what are we actually looking at, right? We have to start there. That's the foundation, right? And so then we can go down a little bit more. We have the 10% U.S. import surcharge, which is the 10% that Trump put on after the Supreme Court struck down his original tariffs, which we already knew about that. U.S. debt. The most fascinating market dynamic on March 2nd is the inversion of traditional market correlations. A surging DXY and rising yields act as a gravity that pulls prices down. This is why at the beginning it said there's a decoupled from traditional economic drivers. This is what it's talking about right here. Because usually when DXY is rising, real yields are rising, usually pulls prices down for gold. But that's not happening right now, right? And so why? Let's look at it. Markets are buying the dollar as a functional safe haven needed to buy expensive oil and settle debts, while simultaneously buying gold as a structural safe haven. And so the functional safe haven involves oil and to settle debts, which involves purchasing treasuries, right? I want to always remember that treasuries, you can't buy US treasuries without US dollars. And if real yields are rising, then the accumulation of treasuries are also rising. Um, they're buying gold as a structural safe haven with zero counterparty risk that cannot be sanctioned or inflated. Right? That's why gold is the safe haven, because it's completely obsolete from anything. Like nobody can control it, nobody can manipulate it. Um, it's a store of value. That's all it is. It's a store of value, a safe store of value. Fiscal dominance. The U.S. national debt has hit 38.43 trillion, and the Federal Reserve is effectively trapped, with the ISM Manufacturing Prices Index hitting a 42-month high due to the war and tariffs. Okay, what's ISM Manufacturing Prices Index? Think about this as the prices businesses pay to manufacture goods and services, right? And so because of war, supply chain gets restricted because of tariffs, right? Manufacturers are needing to pay more to produce the same amount of goods, or pay more to produce slightly less than what they could produce prior to the 42-month high, right? So that's a problem, because if we're not producing anything, we're not selling anything. If we're not selling anything, People are earning. If people aren't earning, then people aren't buying. If people aren't buying, then people aren't earning. You know what I'm saying? It's a cycle. It's a flywheel, right? And yeah, I'm just leave that there. However, the Fed cannot raise rates aggressively without triggering a sovereign debt crisis due to massive interest payments. What does that mean? Let's read it again. However, the Fed cannot raise rates aggressively without triggering a sovereign debt crisis due to massive interest payments. Okay. So, what does US debt and rates have to do with each other? You might be asking that question. And that's a very good question. And so this is when we get into the so man, that's a great question. Let's unpack this because I think it's really important for us to understand what's happening here. So it's basically saying the Fed cannot raise rates or it's going to make the debt that the US has so expensive to pay back that it could cause a massive crisis. And we're already at 38.43 trillion in debt, right? And so, but because we have financed our debt that may have been done through the Federal Reserve, that has most likely been done through US treasuries. And so anytime the rates rise, the Fed funds rate rise, the yields rate will also increase. Okay. Anytime rates increase from the Fed, yields increase from the Fed, right? And that dynamic is what makes debt more expensive. That dynamic right there is what makes debt more expensive. And so that's something to unpack, right? Because it's not going to say, man, that's fascinating right there. But that's something to unpack. But that's how you can think about it. Rates, yields, and debt all connected. They're all connected. Okay, then it says investors are buying gold because they believe the Fed will be forced to either cap yields. Why would they be forced to cap yields? Because they can't raise rates. Okay, or let inflation run high, which I think they're going to choose the latter um, because this will just be a momentary thing. You know, of course, the war is not going to go on forever, right? That I would say that is, we've already seen tariffs. Like we know that's not going to let inflation spur out of hand, right? It definitely could, but up to this point, there's many people that thought differently, and we just haven't seen that. We just haven't seen that. And so, kind of the tail risk watch. What to watch on the back end. While the current stance is highly bullish, strategists are acutely focused on the risk of a sudden pragmatic de-escalation. If President Trump were to unexpectedly drop sanctions in exchange for a pragmatic new Iranian leadership, or if a sudden ceasefire reopens the Strait of Hormuz, the geopolitical risk premium would instantly evaporate. So that fear aspect that gold is thriving in, they're saying that if a sudden ceasefire happens or new leadership in exchange for the dropping of sanctions, that risk premium associated with fear would evaporate. This scenario would trigger a massive rapid liquidation, potentially crashing gold prices $300 to $400. Not super concerned about that. But hopefully that gives you some context in regards to the fundamental environment that we're currently operating in, right? So now, why do we go through all that? We went through all that to bring it back to the charts. To bring it back to the charts. Let's check on news first. Let's check on news. Let's see if we got any news today. Mm-mm-mm-mm. So this is what it was talking about in that article. ISM manufacturing prices, right? 10 points higher than what they expected. If you see right here, above 50 indicates rising prices, below 50 indicates falling prices. And this is a survey of about 300 purchasing managers, which ask respondents to rate the level of prices paid for goods and services. Okay, so exactly what I just said. But that was yesterday. President Trump spoke yesterday. We have ADP non-farm employment change, which important numbers to look at here will be the revisions from February's numbers. Because if you see every month, the previous month's numbers are revised. Literally every month. Look at this. This little arrow here, that means the January 7th number that was originally this was revised to this. And every month it gets revised, besides this 1 month. So something to pay attention to is the revision, the forecast, and then the actual. So pay attention to those. ISM services, which if we're seeing an increase in manufacturing, we could potentially see that same increase in services. And that would also contribute to a higher CPI rate, higher CPI number. And so we got that tomorrow. But no news today. No news today. I want to also look at, let's pull up Reuters. I want to see how are things escalating. Right? That's what I'm looking for. I'm looking for how are things escalating. So 1 hour ago, Israel again attacked the Iranian-backed Hezbollah militia in Lebanon, while Iran struck Gulf states that host U.S. bases. All right, so it's going back and forth right now. This was 1 hour ago. This is 1 hour ago that I just posted. Trump seeks to justify Iran war. Let's see what this is about. Yeah, and if you saw yesterday, I believe he said something about it lasting 3 to 4 weeks, right? And yeah, so let's see. Intelligence assessment warns of Iranian attacks on U.S. Here's that Strait of Hormuz that it was about. It's currently closed. Global oil and gas shipping costs surge, right? All right. I already have a membership. What are we doing? What are we doing? Let me just log in real quick. Because I think this is important. This is important to look at. It's important to pay attention to stuff like this. And so this headline says gold falls 4% as a strong dollar and higher rate bets undercut safe haven demand. And this is why I said, remember, gold thrives in two different environments, policy and fear. But this is one of those headlines that I don't agree with, because in this current environment, what is happening what is happening with US and Iran, like from a fear, geopolitical tensions, uncertainty aspect, is far greater than the rate not being cut. You know what I'm saying? Like the 20% of global oil that just got restricted because the Strait of Hormuz has closed, that's far more impactful than rates not being cut, right? So yes, gold did fall 4%, but to me, this is just a manipulative headline, right? Like, so we have to be very careful when we're looking at this stuff to not just get swayed by every single thing, because in this current environment, and I'm not saying it's like that all the time. Sometimes things that are happening geopolitically might have less significance than what happens with policy. Sometimes it may happen like that. But in this current environment, with what we're seeing right now, like the fundamentally, Iran, US, that um feud, that conflict is far greater than anything having to do with rate cuts, because it has looked like this for almost a month now, right? It's looked like exactly like this. Like we've the expectations for Fed rate cuts to not happen have been in like this already. It's been upwards of 95% since a month ago, right? So it's not like we've seen a dramatic shift in what the market expects from a rate standpoint, right? And we haven't seen a dramatic shift in the data really to change that. Like the data has been kind of in line with not cutting rates, right? So I think it's just important. It's just important to pay attention to headlines like that, because not all headlines are created equal. Come on, what's going on? Thing needs me to verify that to me really quick. Apologize. 1 second. Get back into my account here. All right, here we go. All right, so gold looking like it wants to take a sell off. Got about 127 points to that next decision making level. I'm personally not going to chase. I'm not going to chase. I'm looking for this right here. I want to take this buy right here. That's the buy I want. No trade zone in here. I want to take the buy off of the break of this decision making level. So about 80 points of movement. Let me see something. What would my risk look like in here? 23 points to gain 50. Nah, I don't want that. No trade zone. I don't want that. And like I said, I'm not chasing sales. I'm not chasing sales. Like, if there's one thing that I've been doing well, excuse me, it's not trading outside of my fundamental bias. Now, sometimes like I said, blew my account because I was so committed to what I saw fundamentally that I was hopeful that it would eventually do what I wanted it to do. But what I should have done was exactly what I'm doing now, is just be patient for it. Just be patient for it. Right. That's it. Just be patient for it. And if it happens, if price ends up, moving up here, right, I get my entry, then to be patient, to be patient. So what I was saying was, if price does come up here, move up here, and I take my entry, then I have to be ready to be invalidated, right? And I can't be hopeful that we're going to keep going up just because of my fundamental bias. All right. Super important. Super important. Like we're everybody's gonna learn the lessons. All right. But you can learn from two different types of experience. You can learn from your own experience or you can learn from other people's experience. I'm learning from my own experience, and I'm hoping that you guys will learn from other people, aka my experience. All right. Learn from me. Let me, I've taken the lessons, Q's taking the lessons, the stuff that we're sharing, it's from a place of we've experienced it. We have identified the determining factors, the things that we can control. So when we share with you all the things that we can control as traders, it's from a place of we want you to win. We want you to be successful, right? For the last few days, I have seen these type of moves coming in overnight. Our morning sessions have been really weak, to say the least. I mean, yesterday there was a nice drop as well. So I guess I can't say that. But I hope that you guys have appreciated this session thus far. Um, like one thing you can always count on from us over here is that we're gonna keep it transparent. We're gonna keep it real. We ain't got nothing to hide at all. Nothing. We want to grow together. We want to bloom together. We can go much farther together than we can alone. And I know there's those sayings out there that what is it? Actually, it's a saying that supports what I'm saying. It's if you want to go far, I gotta look it up now. I gotta look it up. I gotta look it up. If you want to go fast, go alone. But if you want to go far, go together. Yeah. If you want to go fast, go alone. If you want to go far, we got to go together. Period. So being a part of a community that wants to grow with you, I think is invaluable in this space, in any space. If you're in business and you can get in a community that is full of entrepreneurs, do it. If you want to lose 50 pounds and you can get in a community with other people that want to lose 50 pounds, do it. If you want to play an instrument and you get in a group with other people that have never played an instrument that want to play an instrument, do it. Like get in those rooms, get in those communities, get in those environments with people who have the same goals as you. It changes everything. It changes everything. I'm serious. It changed. I've experienced it for myself. It changes everything being in those rooms. Like you don't feel crazy anymore. You don't feel like, man, the things that I want to accomplish aren't completely insane. And that's a good feeling, right? That's a good feeling to have, to know that you're surrounded by folks who get it, who see the vision. They may not see the vision the way that you see the vision because it's your vision, but they have their own vision that they see, right? And you guys are working towards similar things, right? I think it's super important, super important. And so I'm definitely gonna put, um, like I said, we're gonna get those prompts. I'm gonna work on that today, right? I go to work right now till about 5, 8 to 5, right? But we will get that over to you guys. It'll be in the description of this video. It will be in the description of this video where you can access the prompts. You'll be able to access the step-by-step guide on what platforms to use, what to do on those platforms. Like we're going to give you all the steps. The only thing you're going to have to do is go out and execute and then read once you actually get the information back to you. So if you have access to Notebook LM, that would be ideal. If you don't have access to Notebook LM, I will give you a another way to digest the information, because I like Notebook LM because it makes it digestible, um, versus me just reading the entire article. But I will give you something if you don't have access to Notebook LM. If you don't have access to Google Gemini, get it. It's free. You don't need the pro one. I don't think you need the pro one for deep research. Let me look really quick. Because we'll need to do a deep research function. Nope, you don't need the pro one. You don't need the pro one for deep research. So you can get it. It's free. It's free. It's telling me right now I can get Google AI Plus for $3.99. So a month. And if it's not free, there's a saying that I heard this past week. And it was the saying was I heard it all week. But stop being cheap trying to get rich. Stop being cheap trying to get rich. Period. If you don't want to spend $3.99 on a system that could make you more productive, 90% more productive, and allow you to learn something that you could then apply to the markets, because that's the prompts I'm going to give you. That's a step-by-step guide we're going to give you. And you don't want to pay $3.99 to do all that, then I don't know what to say. I don't know what to say. But that's all. That information is going to be in the description of this video. All right. This specific video. So you just got to give us some time to put it in there. But in this video, it will be in there. And it'll also be in our Bloom Circle community. There's a link for the Bloom Circle community in our bio. You only need your email and you need to set up an email and password to access our community, right? If you don't want to pay to access our community, that is fine. Like, that is okay. But we have plenty of information in there that you could go access right now, right? You can go access it right now. There's plenty of it. There's plenty of it in there. So I'm just gonna leave that there. 703 price is not doing much right now. It's about to enter this no trade zone that I have here on my screen. I'm looking to take a buy the moment we break 5241.1. Well, not the moment we break, of course. You guys know what I mean. Not speaking a little figuratively, but literally, I'm going to enter once we break this decision-making level and all of my confirmations are present. That's my lead span B sloping upwards. That's price above lead span B. And the conversion line, that's my lagging line above lead span B. And that's buyer's volume on my MACD. Once those 5 confirmations are present, they will all be present at once. It's wow, it's so interesting. It's kind of like those 5 things that I mentioned: consistency, execution, discipline, patience, risk management. If my 5 confirmations aren't present, if I'm missing one of them, it exposes me. It makes that trade less probable. The probability, there we go. The probability of that trade decreases if I don't have all of my confirmations present. And so that if I take a trade when all of my confirmations aren't present, I will reflect on that, which I'm not going to do that. But I would then be able to reflect on that and say, okay, I didn't execute my system. So the outcome is just the outcome. But I didn't execute my system. That is the part I care about the most. Those are the things we care about the most. The outcome is just the outcome. That's why this live is titled Process Over P&L. I did that intentionally today because I blew 2 accounts, because I didn't focus on the process and I focused on my P&L. Period. Practice what you preach, Marcus. Practice what you preach. I hear that in my head playing over and over again. So I'm going to be a better practitioner of what I preach. All right. So I'm gonna sit here. I'm not gonna trade off of this thing. It's got me in trouble too many times. I'm driving. I'm like, okay, what's Price doing? Or what's Price doing? No, I'm not doing that. Not doing that. I'm gonna wait till I'm. Oh, it just logged me out because I logged it on my phone. I'm not doing that. I'm gonna wait until I get back to my office, set up my iPad nice and neat. That, you know what I'm saying? Like, we don't need to rush. And that's what I've been doing. I've been rushing. I've been like, man, I don't want to miss an opportunity. I'm just waiting for Price to, I don't want to miss it. And that's just not, no. The opportunities will be there, guys. The opportunities will be there. So if you join this session, if you're on now, appreciate you for being on. Appreciate you for tapping in. Remember, I'm gonna have some stuff to share with you guys that all you gotta do is go out and use it. And I promise you, it will help you understand the charts a lot better because it's based on the fundamentals, and the fundamentals are the force behind market movement. Period. Right? The fundamentals are the force behind the market movement. And I know Q can attest to this, but it is a lot to research all of the information. Trust me, I know. And so the most beneficial thing that you can do is understand what's currently happening, and then just understand why that's important, because something's always happening. If y'all haven't noticed, something's always going down, something's always happening. So there will be something new that comes up in conversation, right? That you can then at that time, let's learn about that now. Let's learn about that. Okay, let's learn about, and then just go from there. But you're going to have the step-by-step approach that we do to be able to digest what's currently happening, but then know how it applies to the asset that you're looking at, specifically gold. So I'm going to make that specific um, caveat. What we share, what we put in this subscription to this video, what's going to go in our Bloom community. And just so you guys know, I'm gonna just show you real quick. I'm gonna just show you real quick, and then I'm gonna jump off of here so I can get my butt to work. Oh, can't show you right now. Anyways, it's gonna be in the Bloom description. It's gonna be in the description of this video. That's what you can know. You can know for sure it's gonna be in the description of this video by tomorrow morning. So you'll be able to wake up if you trade in the morning, or if you trade at night. You'll be able to use it step by step, kind of digest what's going on fundamentally, and how it applies to gold specifically. All right. But other than that, not much movement this morning on this session, but I feel like we still were able to have a very productive call. I hope this stream today helped you realize that just because you aren't where you want to be in your trading, it's okay. It's okay. And I hope that you invest in yourself, invest time into yourself, invest energy into yourself, invest money into yourself, into being a part of a community that wants to see you win, and that is on the journey with you. That's on the journey with you. All right. It's like, you ever gone hiking with somebody? Like, imagine if you went hiking with somebody, right? And you guys pulled up, or the person told you, hey, I'll meet you there when we're going to meet at 7th Street Mountain. You pull up and the person's already at the top of the mountain. And they're like, come on, it's great. No, it's not that hard. Come on, it's great. Like imagine that. Yeah, you're gonna be a little upset. You're gonna be a little discouraged because you're looking at that like, damn, you're not gonna want to do that alone, right? You wanted to hike that mountain with them. And so that's the analogy I'm gonna use for anything that you're involved in. Right now, we're talking about trading. So get a part of an environment that is hiking the mountain with you. And I'm going to leave that there. And we will catch you guys back here, 6 a.m. on Thursday for another live session. Appreciate you guys joining. Hope it was helpful. If you have any questions, feel free to drop it in the comments. Share something in the comments to encourage somebody else. You never know who may see it and whose life you might impact. I'm out. Peace.